Chris, let me begin with you. You say you have been pulling back on risk for several months. You have shaved 5 to 10 points off of your equity exposure. Tell me why, and tell me where you have been putting that money.
Sure. Well, first of all, the why is not because we're apocalyptic on the markets. It's simply because we have a systematic risk management discipline that kicks in, and it has kicked in a number of times between February and now. So where we've put that capital is we've actually kept it in cash because we expect at some point this summer to be able to reinvest that. It's just really short-term capital that's laying around for more opportunistic.
So it sounds, potential. If I'm understanding you or reading between the lines a little bit, that you have a somewhat mechanistic system that kicks in and causes you to do this. What were the triggers that within that system that told you, hey, it's time to reduce risk?
Well, it's purely based on technicals. It's based on technicals and looking back probabilistically through market history and seeing, what our odds are 3 and 6 months forward from where we stand on these particular technical instances. And they're great because a fundamentalist like me, I always believe what I'm saying, and I would probably ride something into the ground. So I'm thankful that those technical things exist.
All right. Let me ask you another thing. You are at the lowest equity levels in what? How many years?
Couple years, yeah, in terms of our market beta across our portfolios. Again, we're still somewhat pro-risk, and I expect once the midterm elections get behind the market, we still think that growth is pretty good globally, and we still see some decent values out there, particularly outside the United States. But we just think right now it's a time where your spidey sense, if you will, needs to be a little heightened.
So, Ryan, you actually see new highs for the S&P 500 overall in the next few months. What do you see as a catalyst to break us out of the range that we've effectively been in this entire year?
Yeah, I mean,
that's right.
Ryan.
Oh, sorry.
Okay, that's right. When you talk about the S&P up 3.5% for the year, but what's under the surface is really what encourages us. As Chris just mentioned, the technicals. Well, we're more optimistic on the technicals. Look what's leading us. Small caps are breaking out. The Russell 2000 could be up 8 weeks in a row this week. You look at future returns after that, equities usually do really well. Technology is leading, recent IPOs are leading. The risk-on things are leading under the surface, and to us, that's a really good sign that the overall S&P 500, I know the Dow has lagged about flat for the year. We think the S&P and the Dow can probably play catch-up as small caps and technology and more of those aggressive areas continue to lead. And let's not forget, the underlying fundamentals are still there.
We've leaned, though, on these sectors, though, Ryan, so for this entire year and have not yet hit new highs. So what makes you think that at this point that leadership will continue and that all the other laggards in the markets, including industrials, are basically at correction levels right now, are actually going to play catch up in order to help the broader markets achieve new highs?
Sure. Look at what happened last year. S&P gained 20%. We took a look. After 20% gains, you tend to see the S&P up about 2 to 3% at the end of May. That's right about where we were. So it really, in our opinion, it's more of a consolidation the first half of this year with those more aggressive areas leading. Let's talk about fundamentals just for a second. The LEI, Leading Economic Index, came out this morning, one of our favorite economic indexes. That is up 6.2% year over year. Our research has showed the odds of a recession next 12 to 18 months is about 10% or less when you have that much strength on that one particular indicator.
You've got a lot of probabilities that are positive for you. What about the small caps, though, that you talked about? Do you chase those?
No, you wouldn't chase them. Again, Russell 2000 up 8 weeks in a row potentially. But any pullbacks, the higher U.S. dollar, the trade worries, the tax reform that was a reason we like small caps coming into this year, all those positive tailwinds are still there. So, we're going to have a pullback, as Chris said. There's going to be some volatility. But the upward trend is still in play, and we still like small caps here in the second half of this year.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.